Hi, everybody. William Shishadi from Trinity Mortgage again. You saw the sign, our interest rates going up. And you hear a lot about this in the last couple of weeks in the news. You hear our economy is growing. You hear about inflationary concerns. And we heard the Federal Reserve Board last week come out and say they anticipate raising rates, sometimes at the end of this year or the first quarter of next year. Now, what does that mean? Does the Fed actually raise rates? The answer is no, but they do affect monetary policy, which does affect rates. So, in essence, they affect rates. So, probably at the end of this year or the beginning of next year, they're going to make a move to raise rates. The question is, what do I do? If you're considering refinancing, should you refinance now? Obviously, the answer would be yes, since the rates are still relatively very good. For a 30-year mortgage, they're between 2.8 and 3%, somewhere in there. Very good. Most people don't have that rate, and if you're near there, that's great. Some people have a lot of equity in their homes. As you know, over the last year, 2 years, the values of our homes have gone up significantly. And some people are saying, hey, maybe this is the time for me to take some cash out of my home, put the pool in or install the pool or upgrade the kitchen or the bathrooms or replace my roof, and taking cash out of my home might be the best way to go because it's a very low interest. And if you have to borrow money from another source to do those things, it's going to be significantly higher, and that interest won't be tax deductible. So yes, it's a great time to consider doing a cash out refinance to do some of those things. Also, if you anticipate buying a home soon, or you're in the market to buy a home and you think that the market's so tight, the inventory's so low, it's such a seller's market. I'm hearing these stories about people having to make 5, 6, 7, 8 offers just to get one accepted. I hear you. I'm in the business, so I understand what that's like. But at the same time, if you think you're going to wait for the prices for the real estate market to level off or for the prices to come down, I hear a lot of people think that prices are going to come down, and I just don't see that. It might level off. It might stagnate a little bit. It might go down 1 or 2%. But if you think you're going to get a 10 or a 15 or a 20% decrease in prices when the market changes, don't think it's going to happen. Also, a lot of times people say, well, I'll wait till the market settles down and then I'll buy my home, which, but if interest rates are higher at that point, which they likely will be, then all that buying power you just lost because while you're waiting for the prices to go down, interest rates went up, and just maybe a 0.5% change in the interest rate might change a person's ability to afford $50,000 in a mortgage, believe it or not. So all of a sudden, if you're looking for a $450,000 home, at today's rates of 2.875, or you want to wait and all of a sudden the rates go up to 3.25, okay, all of a sudden you can't afford a $450,000 home anymore. It might be something like $400,000. So those are the trade-offs you have to think about. So if I'm considering refinancing, I would jump on it now. If I'm considering buying a home, I would go and try to find the home I need because when rates go up, the dynamic changes. Thanks so much. Please follow us on YouTube. Like us, share our videos. I keep on forgetting. Got to remember this stuff. Please subscribe to us on YouTube. We appreciate so much if you share our videos. Hit the bell so you're notified when the next video comes out. Please like us on Facebook. Please follow us on Instagram and Twitter. And we appreciate you all. And we'll see you next time. Thanks.